Welcome back to our attendees. I'm pleased to present our next speakers, Dr. Martin Hulson, Principal at Roland Berger, and Mr. Soumitra Sehgal, Partner at Roland Berger, speaking on today's topic, preparing for the new normal, what banks can learn from FinTechs. Over to you, gentlemen.
Thank you very much, Melvin, and thank you to the organizers of the Qatar Fintech Summit for this wonderful opportunity. We represent Roland Berger. Roland Berger, for those of us who don't know us, is an international strategy firm. We are based in 35 countries and very happy to be based in Qatar. Both Martin and I belong here. And the reason we're excited is because this topic is close to our heart. So we'll jump straight into the conversation. If you go to the next slide, Martin. Now, over the last 18 months, we've seen a lot of change. And if you've heard the speakers in the morning till now, we all know the kind of changes that we've gone through. None of this was anticipated. And even today, as we stand, these changes are rapidly evolving. What has this done? This has really impacted us in many ways. There has been a call out for those companies which were not prepared for this transition. We've seen a lot of changes on the client side as well. And we do believe that these changes, while some of them are clawing back, there are quite a bit of changes that are now permanent in our midst. What are those changes is what we'll share in the next slide. And we classify these changes into 10 different permanent changes. The first and most important is that the market conditions have changed. Right? If you look at the nature of organizations, the bigger organizations outside of financial services and within financial services have gained market share. They've done so organically, but they've also done so by going ahead and acquiring smaller competitors. So the bigger guys are winning, the guys with the better capital adequacy, the guys with more resources, and the people who are better prepared are gaining market share. On the market side, the US Fed and all other central banks have supported the economy by printing a lot of money. We are still in that phase right now. And that has led to a lot of liquidity in the market being available, which has helped consumers and has also helped SMEs. But when you look at the SMEs today, there are structural challenges that they are facing, and we'll see the challenges of this fructify over the next couple of quarters. On the consumer side, the change for the next 10 years has been pressed into the last 1.5 years. The digital awareness, acceptance, and expectations of consumers today is what people were predicting maybe 5 years from now. Now, this is a stark reality that banks, fintechs, everyone has to contend with. On the other hand, on the operating model side, there have also been changes. We've had work from home at the beginning of the pandemic to a hybrid working model, to a little bit of clawback of people coming back into the workspace, but it's not going to go back to the pre-pandemic levels. So if you look at the marketplace, whether you look at the market conditions, the consumer side, or the operating model, the prevalence of a much more digital business is here for us to stay, irrespective of the sector, and even more so in the financial services sector. So this is a reality that we have to acknowledge, we have to accept, and prepare for. And to illustrate the very specific changes that are happening on these counts or various dimensions, I'll invite Martin to talk a little bit about that.
Thank you. Yes, we have visualized how we see the bank of the future given this background and in this picture. And take a look at the picture because it shows how the banks will change across the entire value chain. And let me perhaps start first with the customer needs dimension. Yeah, in the future, customers will demand digital products. Banking products will be available in a digital form without the need for physical interaction. And this refers to all kinds of products from accounts, loans, investment products, etc. And this does not mean, from our perspective, that the bank has to produce all those products by itself. But in the future, banks will also source and integrate third-party products, for example, from FinTechs. Third, customer channels will be integrated. That means that information about one customer that is available in one channel, let's say a branch, is also to be usable at other channels like online banking, etc. And to make this future possible, data will be at the core of future banks. Client data existing at the bank, as well as external data to be integrated, for example, from external sources such as social media, etc. To understand customers, and using data to understand customers is becoming increasingly important in an era of less and less face-to-face interaction. And data will be used to personalize offerings, of course, to the actual needs of the customer, to offer exactly the right product at the right time. And what you also see is that, last but not least, the bank has also the role to help their customers to adapt to modern financial services in the digital age. Now let's come to the operating model of banks, which will also change along the way. First, obviously, in parallel with the rise of digital channels, the need of an extensive branch network footprint declines. Remaining branches will get a new role as part of the integrated approach. For example, a customer might start his search for a financing product online and then follow up in a branch together with the relationship manager via a digital interface, etc. And second, of course, I assume that most of us have spent much time working from home over the last 1.5 years. We all know this, and remote collaboration will stay. And banks need to implement and leverage their digital infrastructure capabilities to accommodate this fast and remote work, as well as to accommodate digital products and customer interaction into their operating model. And third, changing times will also call for new, robust organizational setups. For example, leveraging agile or autonomous remote working teams. This, together with the increasing virtual collaboration, will need new leadership models and procedures. And we see that to ensure resilient operations also in times of future crisis, sourcing models need to be reassessed. For example, to decrease dependencies of a bank from single locations, central locations, for example, or also from individual service providers. So this is our vision, our view of the bank of the future and how this is impacted by the new normal. And now let's discuss what role will FinTechs play in this picture.
And if you look at these trends and also the bank of the future, anticipating what consumer and market realities are going to be, today banks have acknowledged at least some parts of this reality, and they are trying to address it. But who really is being nimble in terms of making the most of these fundamental changes in the way we live, behave, and interact with banks? It's actually the FinTechs. Today, FinTechs are proliferating everywhere. If you just look at the Qatar market, enabled by a vision from the Qatar Central Bank, supported by authorities such as the QFCRA, the Qatar Fintech Hub, there is an enabling environment which allows for the flowering of a lot of FinTechs, which can take advantage of these particular changes. And the framework that we've used here is around customer. So some of them actually focus on a particular customer need and try and solve for this. There are others who have specific opportunities in the area of product. We heard the previous speaker speak about buy now, pay later. Some people focus exclusively on products. And there are also FinTechs which focus on the infrastructure side, which could be AI, ML, compliance, RegTech, etc. But today, you find that there are a whole bunch of FinTech players who are participating in different parts of the banking value chain. And if you expand this view and look at a regional view, which includes GCC, you will see that the number of players is actually much larger. We'll move to the next slide. Yes. And this, you can see, this is just a microcosm. This is not exhaustive. There are many, many more players which exist currently in the market. And the reason is they are able to take away and chip away at the banking value chain. So these FinTechs are being successful. They are being successful, and the success can be measured by the number of FinTechs that are coming through, the kind of funding they are attracting. They are able to get funding depending upon their stage of evolution, from angel investors to seed investors to series A, B, some even going to the IPO stage as well. So there is a definite belief in the business model from the investing community as well. And very importantly, you find a lot of traction from the consumer side. All of it is very relevant to how consumers want to interact with their financial services provider. To give you a couple of examples, if you look at the next slide, one example is from our home market in Qatar, where you have QPay, which has focused on the payment side. And payments is an area which has been attacked by FinTechs around the world, whether it is peer-to-peer payments, is it if it is peer-to-business, business-to-business, cross-border. And the reason for that is very obvious, because there are a lot of friction points that exist in the payment area. And therefore, you see a lot of innovation and a lot of players coming in. QPay has been quite successful in providing solutions, whether you talk about POS solutions or a payroll solution or e-commerce, and the ability to interact with 14,000 SMEs and 200,000 cardholders in the space of time that it's been around is quite a commendable achievement. A different kind of model is what we've seen in Dubai with the Emirates, and where we have a challenger bank within the existing banking framework. The reason for that being that, yes, there is a recognition that there is a specific market segment which requires different kind of handling. It appeals to a different kind of brand, different products, different processes, and therefore it is best served by a separate entity within the overall banking framework. And here again, if you look at the customer acquisition, they have 400,000 customers, maybe plus or minus there. But again, a sizable chunk that they've been able to gather. Now, the question really is, what is it that FinTechs are doing, which is allowing them to steal a march over the traditional players? Is it just because of the fact that these are smaller, younger, more nimble organizations? Partly, yes, but we believe that there is something fundamental about FinTechs which allows them to gain this market share. And let's talk a little bit about these particular aspects. If you look at FinTechs and compare them to banks, I think the number one difference and approach is the level of customer sensitivity that they bring to the table. Now, banks by themselves are client-facing, market-facing organizations. We have people who go out in the market, they interact with business owners, with individuals, with shopkeepers, try and understand their needs, and come back and provide a solution for those particular needs. What FinTechs do is that they take this customer centricity to a different level altogether. I had the privilege of working with a client who has a FinTech in parts of Asia and Africa. And there it is the CEO's mandate to really define the customer experience and make it absolutely seamless for the customer. So be very ruthless and take off every aspect which can cause problems, whether it be on the technology side, regulation side, work with the regulators, work with internal teams. But the obsession with providing the right and perfect customer experience lies at the very top. And where do FinTechs take this concept of customer centricity from? It is not from their fellow FinTechs, it is not even from banks, but they benchmark themselves against Amazon. And the kind of experience, the seamless, fast, super fast experience that Amazon provides, that is what they want to achieve for their customers. So bringing customers even more closer than they are today is very important for FinTechs, and this is something that banks can take a cue from. The second thing is, how do they innovate? Typically, innovation happens because we hear from the market, we hear from customers, we listen to their customer complaints. Sometimes we do a formal research, and then of course we use all of this information to create new products. What the digital world and the FinTech world does very well is that they actually invert the whole thing. There's a lot of data available basis their interactions with, say, applications, with product services. You get a lot of digital data. And the decision making for innovation, for tweaks, for big changes comes in largely from data. So data, which is available with you, actually guides most of the decision making and most of the changes. So you don't ask customers what they want, but you see how they behave. And on the basis of that, you leverage the data to create more rapid innovation. One advantage that they have compared to traditional banks is that they don't have any legacy. Right? So when they start thinking of providing a service or constructing a product, they start with a blank sheet of paper. This is important because traditionally banks have tried very hard on digital transformation, but in some cases, it is about taking an existing product or process and making it digital. That is not the right way to go. That is one part of the story. The other part, the challenging part, will come by starting with a blank sheet of paper, creating something which is fully digital, both at the front end and the back end. The fourth thing is on organizational simplicity. Yes, the way that fintechs are configured is they act more like tech companies with a product manager, and the product manager is not just a technology product manager, but someone who understands business dynamics, someone who understands how money is being made, and configure teams around that. This is one path which has been taken by a lot of banks which have had separate challenger banks. One big advantage, again, on the fintech side is on the technology front. Since they are mostly new, they are not encumbered with legacy technology or a technological debt, as they call it. But is there something that banks can learn from this? Yes, there are still a couple of things. Number one, in terms of the future of the architecture, if in case you are looking at a challenger bank specifically, you can look at components which are hollow at the core. You don't have to tweak the core banking each time around you want to make a change. And there are products which are available there to support you on this. Even if you don't have a chance to change the core banking system, having an ability to integrate with multiple players outside of the organization is a very important technical architecture aspect that needs to be built in. So there are quite a few things that banks can learn in terms of how to be agile, how to be nimble, how to listen to customers more, how to leverage the inherent power of digital to really serve the customer much better in a much faster way. Having said that, now what do banks do? There are multiple models that exist in terms of the current system. There are fintechs, there are banks. What should we do? Should we compete? Should we collaborate? And all models are currently existing. There is no right or wrong answer. There's one approach which says that we want to transform the full bank and make it into a digital bank ourselves with the current set of talent capabilities that we have. There's another model which we spoke about a couple of slides earlier, where we establish a specific fintech. And then, of course, there is another model which talks about collaboration with fintechs, specifically and especially in areas where they provide very deep functional expertise and they're not competing for the full set of the pie. Now, I won't drain this slide, but the reality is that each of these comes with its own set of trade-offs. In some cases, you own the entire piece and therefore it's under your control, but that can also slow you down in terms of response to the market. In other cases, you can have a very good collaboration, but you may lose some sense of control. So the answer in terms of how banks can approach this opportunity with fintechs is across the particular space. To be honest, today we see the dominant approach gearing towards partnering with fintechs, especially in the Asian markets, because the number of fintechs and the kind of expertise they can provide is absolutely mind-boggling. So we would say that yes, it's a great opportunity, but even while you're partnering, there are a few things that need to be taken in mind. The first one is, if we move on, Martin. The first one is, at the end of the day, when you're partnering with the fintech, there's a key question of who owns the customer and who owns the customer data. Right? We don't want banks to be disintermediated completely, where they provide only the backend. But of course, you need to find a way of working together. And we've seen examples of this in one of the largest markets in Asia, in India. Today, two largest players, the largest fintech player and the largest bank, have come together to provide solutions for their clients, where they jointly own the customer. One owns the customer, the other owns the experience. And therefore, that sort of mechanism needs to be taken into account before the partnering begins. The IT maturity needs to be considered. Also look at what is possible in terms of partnering with fintechs, then the ability to provide a truly seamless option. At the end of the day, the direction has to be towards something which allows for loose coupling with fintechs and other ecosystem players. Bringing all of this together, culture is important. We need to stress upon the two aspects we spoke about, which make fintech successful: their high obsession with customer centricity and customer experience, and the ability to innovate rapidly. So there needs to be a concerted effort to break the shackles of these sort of structures which have plagued banks. The last point, at the end of the day, banks are in the business of risk management and they know it better than anybody else in the market. Partnering with fintechs also brings into account certain set of risks. This could be operational risks, this could be credit risks, it could be compliance and security risks. So therefore, a thorough evaluation of all the risk parameters needs to be done before embarking upon any fundamental partnership with a fintech. With that, we'd like to end this particular presentation. I hope this gave you a good idea about how the fintech opportunity is evolving, what banks can actually learn from fintechs, and in some cases, even collaborate with fintechs to serve their clients better. Thank you very much.
Thank you, gentlemen, for your presentation. So, in short, you'll see a big prospect for fintechs in Qatar and the region and globally as well. Is that what we are summing up here, right?
That would be correct, Melvin. There's a lot of potential, and that by itself is both an opportunity and a threat for banks.
Yeah, but then over the days, we've been doing a lot of fintech events. I don't, do you really think it's a threat for the bank, or they can collaborate together and use their technologies maybe?
And that's the point, Melvin, that today, if you look at how things are evolving, we spoke about 3 models where banks do it themselves, or you have a challenger bank, and the third model was collaboration. World over, we see everything moving towards collaboration because both of them bring very specific capabilities to bear. Banks are very good with risk management. They know how to get the money back, which is very important in banking. And when you look at the fintechs, they're very good at innovation. So at a steady state basis, we see that happening. But banks which do not acknowledge the change, do neither evolution at their own end, will definitely cede space to fintechs.
Perfect. Thank you very much. For attendees who have more questions, please kindly forward it to me. I will get them answered by Dr. Martin and Sumitra. Thank you, sir. And
Thank you.
Thank you.